Tick index is a very short-term intraday indicator that measures the bullish or bearish activity in New York Stock Exchange stocks throughout the day. The tick is an indicator that gives traders an intraday look at the internal strength or weakness of the market. That is the strength or weakness beyond whether the overall market is up on a point or percentage basis. By comparing the number of stocks advancing to stocks declining, the indicator reflects the market's up or down momentum at a given moment. So tick measures the difference between the number of New York Stock Exchange stocks trading on an uptick, meaning last price higher than the previous price, and the number of stocks trading on a downtick, last price lower than the previous price. For example, if at a given moment 5,200 stocks were trading up from their previous prices and 4,800 were trading down from their previous prices, the tick reading would be plus 400. Positive rising tick readings are a bullish signal. The opposite is true for a negative declining tick. However, very high or low tick readings often indicate temporary market exhaustion. A declining tick in a rising market indicates stocks are beginning to trade off their highs, signifying the uptrend may reverse, at least temporary. Likewise, a rising tick in a declining market indicates stocks are starting to trade off their lows, and the reversal of the downtrend is possible. Let's step back and look at the big picture. Why is tick important? How is this relevant to you as a day trader or scalper? And why you need to pay attention to tick? Well, because the tick index is recording the buying and selling action of an entire index. This tells us how many stocks are selling at or below asking price, and how many stocks are being bought at or above asking price. It tells you how aggressive are buyers overall at one moment in time. If all major markets suddenly have aggressive sellers, then you would want to know this and maybe not take a position until you find out why. If all the markets suddenly have aggressive buyers, then perhaps a highly liquid ETF like the SPY will be in play for a quick scalping play. There's momentum created by this sudden buyer's market. So how to read tick index? Tick offers traders a short-term perspective of the overall market sentiment. This is extremely valuable for scalping trades. The ratio of stocks on an uptick versus the number of stocks on a downtick present a short-term actionable point. Tick index value between plus 200 and minus 300 indicate a neutral market sentiment. Bullish is when values become higher than 200, and bearish when it's lower than minus 300. Very bullish is when its value is higher than 500, and very bearish when it's lower than minus 500. And tick values higher than 1000 and lower than minus 1000 indicate extreme conditions, and the reversal or correction of the market is likely. When confirmed with other tools, tick readings can be used to identify intraday turning points. Let's look at few strategies that combine tick index with price patterns and important market levels. First strategy: tick range trading. Tick overbought and oversold levels can vary depending on market conditions. A reading above plus 500 indicates an overbought condition, and the reading below minus 500 indicate an oversold market. Readings above 1000 and below minus 1000 are extreme conditions, and we will try to concentrate our attention on these levels. A simple trading approach is to place trades when the tick signals an overbought or oversold market, as price is testing the support or resistance levels of a trading range. Here we have a 1-minute chart with a resistance zone established by these swing highs. As the market traded into this resistance zone, the tick index moved above 1000, signaling an overbought market. Price then rejected that area, and the tick indicator turned down. A short sale would have been placed when the price dropped back below the resistance level. A protective stop would be placed just above the high of the rejection, which is the top of this swing move. Here's an important point. You must scalp these overbought or oversold readings only if the price is at an important key level in the market. You don't trade simply because the tick is at 1000 or minus 1000 level. Use it in conjunction with price. Here are several valid tick trades around support and resistance levels. The second strategy involves tick divergences. Tick divergence setups are probably the most popular use of the tick indicator. Divergences between price and the tick occur when price makes a higher high or lower low, and the tick makes a lower high or a higher low. These signals are often followed by short-term reversals or corrections. In this example, after a swing to the upside, the price again retested its intraday high at the upper end of the resistance zone, and the tick exceeded 1000. However, this tick overbought high was lower than the previous tick overbought high. This divergence between price and the tick meant that the market was rallying with fewer stocks marking upticks, a sign of internal weakness, and set up another short sale opportunity when price dropped back below the lower resistance level. In the case of a long tick divergence signal, price makes a new low, but the tick indicator makes a higher low. In this example, price fell to a new low, but the corresponding tick low was higher than its previous intraday low. A long trade would have been entered when the price traded back above the first low, with a stop placed below the most recent low. As always, keep an eye on key levels. If a divergence occurs at an important point, it has a better chance of completion. Also, wait for a trendline breakout to increase your chances of a successful trade. This way, you also filter some bad divergence signals. Here are some valid tick divergence trades. The third strategy involves a zero-line crossing of tick index. In addition to its usefulness in trading ranges, the tick can also set up trades in trending markets. In a strong uptrend, any counter-trend movement is usually marked by the tick moving between minus 100 and plus 100. In these situations, minus 100 becomes the oversold level. More often than not, the tick tests the zero line. These tests offer opportunities to enter in the direction of the prevailing trend. In this example, SPY was in an uptrend, and the tick reached the overbought level above 500, which indicates a strong uptrending market. In such a situation, the goal is to buy on a pullback. As we talked in the previous strategies about key levels, let's use this time a Fib retracement to confirm the zero-line crossover. As the tick dropped below zero, price also reached the 50% Fibonacci retracement line. The combination of the tick oversold signal and the 50% Fib retracement offered a higher probability for an up move. You can also use this technique with pivot points. In this example, we have a downtrend. The tick moved toward the zero level, and the price stopped at this pivot line. You can also add a moving average to confirm better the short-term trend. Here are other examples of tick zero-line crossover trades at the 50% Fib level. The tick index offers traders the advantage of observing market sentiment for a short period of time. This gives a small window of an opportunity to trade. It also gives an opportunity to not take a trade. Patience is required when trading this setup. The tick index should be given time to bottom out in an uptrend or top out in a downtrend. Also, don't expect a sudden price reversal when the tick indicator simply hits the zero line. Other technical factors should be consulted before entering any trade, such as employing a price pattern as presented in the previous examples. So tick indicator should be used to set up or confirm a trade, not as a standalone tool. By utilizing the tick in conjunction with price patterns or technical indicators, and in the context of the overall trend and market environment, you can make better buy and sell decisions. As always, if you learned something new and found value, leave us a like to show your support. Subscribe to our channel and hit the bell icon to stay notified when we upload new videos. Until next time.